Hey everyone, today I'm going to talk about order flow as a unique trading concept. Now I say unique because order flow analysis, particularly when used in combination with other technical concepts, is like having X-ray vision for the markets. I think this analysis approach allows us to see beneath the surface and understand at the same time the dynamics between buyers and sellers, giving us an edge in our entries. In this tutorial, I'll share what I believe is an effective and straightforward trading strategy that will help you identify key elements hidden within order flow. Whether you are a beginner or an experienced trader, I hope this video, which I recommend watching till the end, will elevate your trading game. Alright, so starting with this portion of trading, we can see that following a pronounced bearish period that kept clearly persisting, the market transitioned into an accumulation zone. As the price began its ascent, it reached, after printing a series of higher lows. So as the price began its uptrend, it reached a temporary peak, reflecting the bullish sentiment prevailing in the market. However, during a subsequent attempt to achieve a higher high, the market saw a decline in demand and consequently failed to make further progress. This failure, particularly after this lower high here, signaled a shift in momentum, with sellers gaining control and initiating, as you can see in the chart, a downward trajectory. Now, as soon as the market, as is the case with the formation of this temporary base down here, which if you notice finds also support from an ascending line, this technical factor holds significance in my view, as it influences, relatively speaking, obviously, the market's bias. So as soon as the market gives us evidence that selling pressure is depleting, we start conducting a simple but effective order flow analysis, which, by the way, also examines the volume and timing of buy and sell orders entering the market. Now, by doing this, we can obtain, I think, valuable insights into how the price moves through different levels of liquidity. More importantly, though, this approach not only enables us as traders to sort of sense the speed and flow of the price, but also allows us to identify key areas of market imbalances. I would also like to emphasize that, in my view, imbalances are fundamental to any order flow strategy. Now, the reasoning behind my assertion here is straightforward. Imbalances play a crucial role in determining whether a market is balanced or imbalanced. What's more, order flow imbalances, they do possess the advantage of being easily identifiable even to the naked or untrained eye. Which means the ability to spot these unique patterns with ease without relying on complex indicators or tools sets them apart. Said in another way, by simply monitoring the ratio of buying to selling orders, traders can quickly identify situations where one side dominates, indicating a potential shift in market bias. And now, as we go back into analyzing the chart, it becomes evident that during this downward move, certain areas of imbalance have emerged, indicating the dominant influence of the supply side. This influence has significantly shaped the entire trajectory of the downward trend. However, it is precisely these red imbalances in the order flow that we are going to capitalize on in our upcoming directional trade. Allow me to briefly explain. As I have already mentioned in my previous videos, there are a number of ways to evaluate a trade. Personally, I rely on reading price action, using confirmations or filters, and implementing risk management. It is crucial, guys, to have filters in place, otherwise abstain from trading. In this particular trade scenario, we have the necessary filters that could result in a potential long entry opportunity in the market. This implies that once the order flow imbalances within the trend are exhausted, the market stops its decline. This also occurs when the demand side is capable of absorbing successive waves of sell orders that eventually get bought. Consequently, and as you can see in the chart, the market undergoes a structural break before reversing or changing direction. Additionally, through successful testing via these rejection weeks down here, the market reconfirms to us the bottom of this temporary base and order block. Therefore, these factors, especially the price retracing back inside the order block zone, strongly indicates, in my humble opinion, a favorable opportunity for a long entry. So this area here should be your entry point for a trade against this order flow zone. We have to remember here that markets, they do possess a remarkable tendency to seek price equilibrium and address order flow imbalances over time. Now, those traders who understand this underlying principle, they will use order flow analysis to identify and capitalize on these inefficiency areas. So again here, when we observe order flow imbalances and other crucial technical factors in the market dynamics, we can see a close correlation in their actions. It's important to note that mastering the art of reading price action takes time and effort. There are no shortcuts. That's a well-known fact. However, by recognizing crucial pattern formations such as imbalances, order blocks, or structural market breaks, you can develop a strategy around order flow analysis that will help you navigate the shifting tides of the market with a high rate of success. The profit targets here are obvious as the market continues to rally, seeking to restore price equilibrium by addressing existing imbalances. And by the way, I would like to share another way for conducting imbalance analysis that I didn't mention in this video, and it happens to be one of my personal favorites. I actually demonstrate this technique in the next video, so I highly recommend giving it a watch. Alright gang, thanks for watching, see you in the next one.